So to finish the chapter up, I want to go back to the ledger. Okay, I want to go back to this ledger. Notice that in this case, the ledger has all the accounts listed and their balances. Notice too that a lot of balances, right? You have asset accounts have balances on their debit side, but then you have your liabilities have account balances on their credit side. Common stock has a credit balance, but dividends has a debit balance. Revenue has a credit balance, but your expenses have debit balances. Well, if you did all your accounting well, the balance, the accounts that have balances on the debit side will equal the balances of the accounts that have credit balances on the credit side. And we do this in a very simple statement called a trial balance. A trial balance. And a trial balance basically is quite easy to put together. You simply put the accounts down in the list that are shown in the ledger. If there's no ledger, you put them in the order that you learned: assets, liabilities, stockholders' equity accounts, ending with dividends, revenue accounts, and then your expense accounts. So notice cash, supplies, prepaid insurance, equipment are all assets. They have debit balances. So you put those balances in the debit column. The liability accounts and common stock have credit balances. So you'd put those balances in the credit column. Dividends in the debit column, revenue balance in the credit column, and your expenses in the debit column, and simply add them up. Add them up. Your debits, the total of your debit balances and the total of your credit balances should equal. That's a trial balance. That's it. You don't have to make anything up. You're simply pulling these accounts right from the ledger, putting the balances from the ledger right in here on the debit or credit side, and adding them down. And that's basically how simple.
Excuse me, I missed it, but why were all the debits up at the top and the credits near the bottom? What's the organization reason for that?
Because cash is an asset account. Assets have debit.
Are those all current asset accounts?
Well, cash, supplies, and prepaid insurance are current assets, but equipment is property, plant, and equipment, and it has a debit balance. So your assets are listed first. So yes, your first accounts are going to be listed as assets, and so they're all going to have debit balances. Your liability accounts are listed next, so they're all going to have credit balances, right? And then it sort of get mixed here between common stock on the credit side, right? Dividends has a balance on the debit side, but revenue has a balance on the credit side, and your expenses have all debit balances. Does that help explain a little bit? Whatever the balance is in the account is going to be either on the debit side or the credit side. So yes, all these are debit balances because the first accounts are all assets. And all these are bunched on the credit side because all of these represent liabilities and common stock, which have credit balances. And then it kind of gets mixed because the accounts are different at the bottom.
Does it follow the same order as the what is it? The
balance
sheet? Yeah.
Mm-hmm. Yeah.
Okay.
It'll follow the same order as the balance sheet, and then the income statement after that when you get to revenue and expenses listed last. So here your do it exercise for objective 5 gives you a bunch of accounts from the ledger of SnowGo. Now, this is not normally how we would do a trial balance because the accounts would be given to you. Simply look at the ledger. The accounts are already organized and ordered for you. But here they want you to see, they want to test how much you remember about the order of the accounts in the ledger. So remember, the order accounts in the ledger, assets would be first. So first you need to pick up your asset account. So I have equipment, I have accounts receivables and asset. In this column, I have prepaid insurance and cash. Those are my asset accounts. What order would they be in on a balance sheet? Well, cash would be listed first, right? Accounts receivable would be listed second. Prepaid insurance would be listed third. And equipment would be listed fourth. If we put these on a balance sheet, that's the order that they would be in. Okay. All the balances you see next to them, you have to ask what side of the account would these balances be on? And of course, because they're assets, they would be on the debit side. All these would be on the debit side. Right. So all these balances would show up on the debit side of the trial balance as well. Okay. So that's the first thing that they want you to do. The second thing they're going to do is say, okay, what comes next in the ledger? And your liability accounts would come next. You have a bunch of liability accounts. Accounts payable is listed here. Salaries and wages payable is listed here. Notes payable is listed here. All those are liability accounts. And the question would be what order they would be in. Normally speaking, your notes payable would be listed, then your accounts payable, then your salaries and wages payable. The balances here would be on what side of a payable account? Well, all these balances would show up on the credit side of the payable account, right? Liability balances are normally on the credit side. So you would put those on the credit side of the trial balance. Okay. Then you do common stock, then dividends. Common stock balance is on the credit side. Dividends balance is on the debit side. Then you do your revenue. Revenue is on the credit side. And then you have your expenses. Both these expenses are on the debit side. So when you actually look at the trial balance for SNOGO, this is how it would be look, right? Your assets would be listed first. And of course, assets have debit balances. So they are going to clump up here. All debit balances because all assets have debit balances. Then you have your liabilities listed next. All liabilities have credit balances, and so they'd be in the credit column. Common stock with a credit balance. Dividends with a debit balance. So service revenue with a credit balance. And your expenses both have debit balances. So as you see, the total amount of debit balances in the accounts equal the total number of credit balances in the accounts. And so you're balanced. You're doing good. And that's basically what a trial balance is, to make sure your ledger accounts are balanced.